You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo, and I've fought my way out of a sick bed just to be on the show today, listeners. I was pretty under the weather, but nothing, neither rain nor snow nor sleet nor horrible, horrible stomach flu will derail the Option Block. And where can you find all of that quality Option Block goodness? Well, quite a few places, including the mothership, theoptionsinsider.com, as well as iTunes and Stitcher, and of course our mobile app available for pretty much all the app stores, Google Play, iOS, and even the Amazon App Store. So for all of you out there rocking the Fire tablets and the Fire phone, all three of you, we've got a version for you. And of course, you can grab the RSS feed for whatever show you want, pull it into Pocket Cast or Downcast or whichever other one you like to use out there. Double Twist, I like to use that one myself. Or you can just search for the names of the shows. They're all available there as well. So no shortage of ways for you guys to find all of our great programming. And joining me for today's episode, Uncle Mike, unfortunately, is on assignment yet again, so another truncated panel for another truncated show, but we shall do our able and level-headed best to make a good show for you. I'm joined by the Greasy Meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Greasy Meatball, welcome back to the program, sir.
Mark and Mark at it again.
Yes,
doesn't get any better than this.
The not-so-dynamic duo today, perhaps.
Oh, well, I'll make up all the dynamism.
There you go. You can bring the dynamism.
Well, what a lot of people don't know is interestingly, when you're ill, your voice actually gets higher as opposed to lower.
Interesting.
And less scratchy.
So I'm the opposite of the Barry White sick voice.
You're the opposite. So when Mark's really ill, he sounds like a soprano.
Oh, there we go. Now I can finally try out for that choir I've always wanted to do. All right. With our panel assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. As you guys know by now, this is the portion of the show where we break down what was moving, what was shaking, what was lighting the old tape on fire today from an options and from a broad market perspective. Most of the major indices on the downside, pretty aggressively to the downside. S&P's off about a full percentage point or a little over 21 handles today. The Dow about the same, about 1%, and the Q's off a resounding 1.6% today. So not a good day out in NASDAQ land. A lot of that, of course, feeling the weight of some of the issues with the Apple Watch. If you have a tattoo, it doesn't work. Some parts are faulty, et cetera, et cetera. So a lot of that coming to bear on the old NASDAQ today, leading the charge to the downside. And, of course, the VIX Cash, the winner in the downside fest, all vol creeping up. VIX Cash moving up well over a point today, 1.17 points actually, to end the day right around 14.5 or so. A lot to digest in today's activity, Mr. Sebastian. But what in particular really caught your eye in today's market movement?
I mean, did Apple outsource the iWatch to Yugoslavia? Is it made by the same people that brought us the Yugo, the Pinto? But that thing is a mess. And but this sounds like a maybe a little bit worse than when they had the iPhone grip of death issue with the iPhone 4. I don't know if you recall that, but then you had to wear a case, and then it worked fine. I'm sure they'll get through this, but yeah, yesterday was a little bit of a sell-off. Today, pretty big. I still think this is maybe a one-off. We maybe get one more day of follow-through, and then we'll probably bounce higher. I'm not a huge believer in the sell-off. Now, the one area that is interesting is we're seeing currencies begin to move again. The U.S. dollar stopped being super strong. German bonds are actually have a yield, and we're seeing U.S. Treasury yields also move. So a little bit of interesting action, more on the interest rate side, and I think that was what was driving a lot of stuff in the equity market, and I think that's where things were coming from.
Yeah, I agree that, the Apple thing is just kind of just more piling in after the fact. I think a lot of people could probably agree that Apple could use a bit of a sell-off at this point anyway, refresh those levels a little bit post earnings spectacular, and that's exactly what they're getting here. Does seem like to be just like a confluence of errors there. The parts issue, now all the stuff coming out about you can't use it with a tattoo, which would be a problem for the Apple clientele.
I didn't hear this.
Yeah, this is the new story.
If
you have a tattooed wrist, you can't use the iWatch. I just saw that today. So yeah, that's
weird.
That would probably come back to bite a lot of the hipsters who are buying the Apple Watch. They can't use it with their tribal tattoos on their wrists.
Well, all those girls with tramp stamps will never be able to wear an iWatch for a belt.
Yes, they can't strap it around their back. Well, a few other big names that people like to trade in options land, making some headlines today and moving off quite a bit. In addition to Apple, of course, the other name, a lot of people like to float into that conversation of perhaps names that are a bit overinflated, need a bit of a sell-off, of course, referring to that maker of PR/electric cars, Tesla, taking on the chin again today, also off about nearly 3%. Similar percentage points down to Apple. Yeah, both of them off about 2.7% today exactly. They're having some issues in regard to their upcoming announcement. I believe it had to do with some battery issues, commercial scale batteries. Residential and commercial scale batteries they're planning to announce to the world on Thursday, and apparently people are not liking that. Stock taking a bit of a hit, not surprisingly there as well. So yeah, two of the bells of the ball when it comes to the tech and the NASDAQ cycle, both taking it on the chin today. Not surprising that the NASDAQ as a whole having a pretty down day. Speaking of down periods, it's been a relatively bad time from an options perspective. We, of course, know this. We let you guys in every month on the options volume, the options market share at the end of every month. And so it's no surprise to you guys that last quarter, Q1 of 2014, was pretty weak from an overall options perspective. Our friends over there at Tab, including Andy Nybo, who I believe you chatted with, Mark, over at the RMC conference a few months ago, always one to likes to sit down and talk about some option stats. He parsed it in his regular report for the Tab group, looking at what was going up here from an options volume perspective in Q1. They're talking about overall options volume in the U.S. fell 13%. That's just from Q4 going into Q1. So that's the biggest quarter-over-quarter decline since Q3 of 2013. So it's been a little while since we've seen that aggressive of a sell-off. First quarter U.S. options volume down 9% to 993 million contracts. That's down from 1.09 billion contracts a year ago. In that same quarter, seeing 6 of the 10 most actively traded names that usually generate a lot of the options volume saw substantial options volume from a period. VIX volume probably leading the charge. There's been a lot of drumbeat, a lot of articles written about what the heck's going on with VIX. Why is no one trading it of late? Talk about it a lot on our Volatility View show as well. VIX kind of leading the charge with about 45% decrease in volume over that period. Facebook options similarly steep decline, 35%. Those two really kind of leading the charge to the downside. Not surprisingly, perhaps, the one bright point in all of that sea of red ink was USO. If you've been paying attention to anything over the past 6 months, oil has been kind of the product du jour, and options on USO have been just lighting it up 464% over that same period. Apple also surprisingly did fairly well over that same period as well, jumping 147% volume-wise in that period, though a lot of that was driven by some of the tail tail end of that 7-for-1 stock split they're saying here. So interesting stuff here. Mr. Greasy Meatball, any of that come as a particular surprise to you? I mean, the overall numbers aren't. We talked about those before, but just in general, perhaps a few bright points in there, like USO doing so ridiculously well. We all knew it did well, but perhaps not that well.
Yeah, I mean, I was surprised by that. But as anybody, of course, we've got all these crazy low volumes. So what do we need is more U.S. options exchanges sticking around.
Well, not just sticking around, launching new ones. If in a few months we're going to have the ISE's third exchange come online, and then a few months after that, if they get approval, BATS will have their second exchange come online. So we'll be up to about 14 or so, I think now. So yeah, that'll be good times to parse all this dropping volume. I'll be going down to the big options industry conference next week if I can stay conscious and stay healthy, and that I should be able to parse a lot of that. While I'll be bringing on the head of BATS options and the head of a lot of these other exchanges to talk to them about this exact issue, about why they're launching new trading venues into the teeth of this fairly aggressive volume sell-off. So I'm looking forward to seeing what they have to say about that. But otherwise, it's been a pretty interesting period, Tesla and everything else notwithstanding. So I think without further ado, let's keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program where we break down the weird, the wild, the wondrous options activity that is lighting up the old tape today. And keeping with that theme you invoked earlier, Mark, we're going to kick things off on the currency side of the fence. We don't do that too often here on the old Odd Block. In particular, this is the PowerShares, DB US Dollar Index ETF, ticker symbol UUP, closing today off a little bit down to $24.91. It's a name that does fairly robust volume, pushing nearly 40,000 contracts a day, doing nearly 2x that, and doing nearly 80,000 today. So a fairly robust day out here in UUP land. And what caught our eye in particular was some fairly near-term, really sizable call buyers. I said about 70,000 or so contracts going up today, and a full 28,000 of those come in some love for the May 25 calls. We started profiling one mega block of 25,000 going up paper buy-in of these May 25s for an even quarter. And then as the day went on, about 3,000 more going on to a total of 28,000. No stock going up with this, so it appears to be as it appears on the surface, just a straight up buy. Now, there is some sizable open interest here to the tune of nearly 60,000 contracts. This is the only strike anywhere in May that is anywhere close to that level of open interest here. So strong chance that this is indeed a close, or it could be someone perhaps taking a flyer, like you were saying earlier, Mark. The dollar is moving a bit. Currencies are moving a bit again. Perhaps someone taking a very near-term flyer that the dollar is going to be off to the races here. What's your take? You think this is closing, or you think this is a purely speculative flyer?
Yeah, I mean, the dollar is moving. We went from, in a week's time, being completely overbought to now oversold. I would absolutely fade this move. So, it's probably a close, but it's probably not a terrible flyer to take on either.
Yeah, looking at the paper here, I would probably have to lean on the side of a close. Or not many scenarios where I would see someone coming in slinging 25 cents just to go for a few weeks here. I mean, it is, given what we've seen out in the dollar of late, that isn't completely out of the realm of possibility, but it seems I would probably have to lean towards a close. If you guys disagree, let us know. You know how to reach out to us. We love to hear from you guys. If you say you guys are crazy, this is clearly new opening paper, hey, let us know. We love to hear from you guys. As we move on to our next name here on the old Odd Block, this is Kinder Morgan Inc., ticker symbol KMI, closing today. Another one off a wee bit, down to $42.95 today. It's the name that does again, another fairly heavy volume odd block day today. This was one averaging about 30,000 contracts a day. That's probably about 100x the typical ADV for most of the names we profile here in the odd block. Today, doing even more than that, doing nearly 160,000 contracts. So just size paper going up here in good old KMI, and it's pretty sizable and also fairly long term. I have to scroll all the way down here to the bottom of my ticker, listeners, to find this one for you. This was the Jan 2017 50-60 call spread, going up when we started profiling it, going up in the two massive blocks on the Philly for 35,000 contracts total for 90 cents. I believe that is paper buying. I'll have to look into that to check. As the day went on, pretty much about 2x, just about near 2x going up on there. So total, a little over about 62,000 of these call spreads going up total on this. So 120-odd thousand contracts going up in this one massive spread. If you look at these strikes, these are also strikes with a literal ton of open interest. There's 302,000 contracts open on the Jan 2017 50s and 295,000 contracts open on the Jan 2017 60s. So this could be rolling of open interest. This could be closing of existing open interest. Probably leaning the latter, unless this guy's he just needs to have more of this. I don't know. But either way, there's some pretty impressive paper going in. It looks like this was paper buying on this spread. So, Mr. Sebas, what's your take here on our friend slinging some size pretty far out here in KMI?
Well, it's one of those names that, it's one of those MLP kind of names that, kind of got beat around with oil, and really in a position maybe to be one of the leaders if oil stabilizes as it has and continues to recover. So as USO volume falls off, we could see Kinder Morgan and the whole oil space start to do a lot better. So that could be a close and roll. I don't know either way though. We'll find out tomorrow.
We will indeed. Given the size out there, he may be just piling on. I mean, this guy clearly has an axe to grind out there.
Especially back there. Yeah, especially back there. He
$10 spread like a year and a half out. That's interesting. It's a little tight, but hey, you never know.
Yeah.
You never know what people are up to. That's we should probably subtitle the odd block too. You never know. As we move on to our final victim here in the old odd block today, this is my favorite. Youku Tudou Inc. This is an ADR, clearly. Ticker symbol YOKU. Closing today, $18.70, up about 70 cents, or nearly 4% on the day. Excuse me. This is a name that does, about 7,000 contracts a day, so fairly decent volume, given its name, doing about 14,000 contracts today. And what caught our attention was not a year and a half, 2-year out call paper. No, much closer to home. And much closer to the downside. It was June put paper in particular, which caught our eye, was the June 18 puts, going up 5,000 times for $1.20. Went up in one pretty much sizable block. We also saw about 6,000 of the June 19 puts going up today as well. That's on open interest of 7,300 on that strike versus 296 on the June 18 puts, excuse me. So it looks like our friend here perhaps is taking a bit of a roll down from the 19 strike to the 18 strike. Mark, you know how much we love these types of trades. These guys doing all this work to probably roll down a one strike. These are what we tend to call love your broker trades. And there's a reason for that, because brokers love these types of trades, don't they, Mark?
Oh, of course. Yeah, this broker was just beaming to the client how smart they were when they were doing this trade, I'm sure. And the broker loves them. Yeah, absolutely. I'm always shocked that for that 1 point. I mean, it just sometimes these things just don't make sense, and that's kind of what this
commissions on 11,000 contracts. There's very little reason to do this for one handle.
No.
What are you going to make, 60 cents at the end of the day?
No.
I don't know, maybe. Yeah, this is just this is the fun one. Again, that's why we call it the odd block, listeners. The paper doesn't have to make sense. It just has to trade, and then we could parse it here. So that's our odd block for today. If you have alternative ideas for what these people are up to, let us know. We'd love to hear from you. Speaking of hearing from you, it's time for you guys to take the reins on the old program. It's time for our Thursday mail block palooza.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is, of course, a portion of the show where you guys get to take the reins, and we have a bunch of questions come in. No shortage of ways for you guys to make your questions and comments known to us here on the old program. Of course, leave a question or a comment on the website. You can use the comment form or the website feedback form. A lot of you guys like to use that. Of course, you can also find us on social media, twitter.com/options, facebook.com/theoptionsinsider, or we're on stock twits at Options Insider, or just find us via the old-fashioned way of email, questions at theoptionsinsider.com. Be sure to put somewhere in there, hey, question for the option block. And kicking things off, we've got a question from Nick. Nick writes, I've heard markets spend 30% of time trending and 70% of time bracketing. Can I use options to trade both of those environments? Well, short answer to your question is yes. This is kind of the age-old long premium versus short premium type of debate that we have on this program on a regular basis. And both of those market environments that you're talking about are both very, very good times to be using one side of that coin versus the other. In the trending time, you probably might want to be long premium to catch those big movements in the underlying. The bracketing time, when you can kind of carve out a clearly defined range or trend in the underlying, you can usually write premium to capture those and do fairly well as well. So yes, short answer to your question, options can be used for both of those environments. Mr. Greasy Meatball, Mr. Seabass, what do you have to add here for our friend, Mr. Nick?
Yeah, it's all about just, the key with those markets is making sure that, when you're in the buying mode, that what you're buying is inexpensive, and when you're in the selling mode, what you're selling is cheap. Just because the market is trending or bracketing doesn't mean that your trade's going to do well if the volatility is properly priced or mispriced. So just be aware that you can. That doesn't necessarily, to quote Jeff Goldblum, just because you can doesn't mean you should.
Is that from The Fly?
It's from Jurassic Park.
Oh, that's right. Trying to think of the great oeuvre of Jeff Goldblum.
Well, we got the new Jurassic Park coming out,
true.
So I figured give Jeff Goldblum a throwback.
That's true. The old Jeff Goldblum classics of two, The Fly and Jurassic Park.
He's been in some other ones.
He's been to other movies. I don't know.
Earth Girls Are Easy was great.
Oh, well, there we go.
He was in that.
Yes. Listeners, write in with your favorite Jeff Goldblum film. Maybe we can get a top 3 of his films as we move on to another question. Excuse me. This one comes from Alan. Alan writes, why is rolling a position so prominent? Isn't that just averaging into a losing trade? This is, again, another kind of frequent conversation we've had on the show. Some people have written in with questions regarding, hey, here's my trade, look at it and see what you think. And it started off with some clear intent to it and some very basically defined strategy. And then they kind of went off the rails as they started adjusting here and selling here and closing here and opening here. And what they end up having is some weird Franken monstrosity because they were very much over trading. I think that's maybe kind of what you're alluding to here, Alan, as well. We in fact, we joke about this on the show all the time, is that covered call writers are probably the biggest offenders in this area. They'll buy an underlying, they'll identify a strike they don't mind selling the underlying at, they'll write the call there. When the underlying gets even close to that strike, they start going crazy rolling, ending up taking losses on the calls and everything else like that when they should have just let it go, to the point where getting the underlying called away, actually a good thing in that scenario. So I do tend to agree with you a little bit. Sometimes rolling is overdone. That said, I don't think it's always it's not always a loser. It's quite often, it can be a good thing. We've outlined many times on this show people rolling winners How many times we talk about on the odd block where someone's got some house money they're playing with and they're rolling a little bit farther out because they still have that same outlook on the underlying or the same outlook on volatility, and they want to just take that house money, take some of it off the table, and put the rest to work, kind of playing with house money at that point. So that's a good scenario where rolling can work in your favor. So rolling is not always just a negative thing. Can it be overdone? Sure. Like anything, it could be overdone, but just cutting it off at the top and saying it's a negative thing is not exactly my MO. All right, listeners, and I'm just realizing that those were actually older questions. That's what happens when you stumble out of a sick bed to host a show. So those listeners, Alan and Nick, they get double answers for their questions as we move on to some hopefully newer questions here on my list. Let's see here. We got one from we got a couple here. Let's see. Let's go for this one here from Anglo Jim. I like this handle. He writes, we saw a trending bull market for most of 2014. Is it simplistic to say that you could have just bought out of the money calls and done fairly well? What about that decay that you're always talking about? Does that become a factor in that strategy, or does the bull market overcome it? Well, Mr. Sebastian, this is a conversation we kind of always jokingly have on the show. Look at a year like last year, and people probably think, hey, they can just buy a call, and it's pretty much all comes out in the wash there at that point. What do you have to say for our friend here, Mr. Anglo Jim, who thinks you can just buy a call in those up markets, and you pretty much all you need to do?
Well, I mean, it's all about strike selection and duration, right? So, could you have done that? Yes. Is it that simple? No. There are all sorts of different facets of that call purchase, right? Are you buying a year out? Because, hey, if that year out, toward the end of last year, we went from low, in December, we saw volatility into the year end being pretty expensive. So if you bought a 1 year leap, you're buying somewhat expensive premium. And in the SPX, the premium in that 1 year leap might be 10, it could be $100 or $200. So just because you buy a call doesn't mean you're gonna make money because you're paying for all this premium. So the short answer is yes, but the long answer is, but you have to do it right. And unless you do it right, the answer is no.
Yeah, that's where that whole doing stuff mantra that your buddy Andrew likes to say comes into place. You do have to do some stuff to make those calls pay off. You have to do stuff. Otherwise, like he says, that decay is going to come back to bite you, and you're not going to get anywhere near the performance that you would hope. Just buying a call, for all the reasons we've cited so many times on this show, why it's so difficult just in general to buy out of the money calls and over the long term have that trade succeed, for all the reasons we've outlined here. Skew is working against you, and the decay is, those things are all decay. They're going to decay like crazy. So if the underlying doesn't move your way in a reasonable amount of time, all that decay is going to come out of those options, and it's a very difficult trade to make work over the long term. So yes, you do need to do a few other things to make that trade work out probably the way you would just, I guess it would, looking at it on the surface. Let's see here. Let's try. Hopefully we're getting all the new ones here. Let's go for one here from Orlando. So he writes, I'm thinking of using weeklies to initiate debit vertical call spreads. Is that a good use case for them? Well, here we go. Someone actually writing into the show saying they're actually going to spend some money on weeklies. We don't see that very often, Mark, do we? That's a very rare use case. Most times people are writing in saying, hey, I want to sell out of the money puts or out of the money put spreads or any sort of selling premium combination you could think of. I can probably count on one hand the number of times people have written in saying they want to buy stuff here in the weeklies. So Mr. Sebastian, he doesn't give us much to work with. He says he just wants to buy verticals in weeklies. What do you have to say here to our friend Mr. Orlando? Well,
one of the issues with debit spreads is that, especially in the weeklies, the wings don't decay as quickly as the meat does. The thorax of the trade. So that's why so many people like selling. It really depends on strike structure. So if you're looking at buying kind of out of the money calls and then selling something further out against it, I think that's an interesting way of trying to do like a little swing momentum trade. But if your plan is to buy an at the money call and sell an out of the money call, that's probably a losing proposition.
Yeah, the at the money is going to erode pretty quickly, and the out of the money is going to be problematic.
Yes, indeed.
Did you just say the thorax of the trade, by the way?
I did. I said the thorax. And, going back to the other question that we just had, when I was at at the RMC, the one point that Buzz Gregory made from Goldman Sachs was that with slow and skew steep, you can do a what amounts to a put spread and long call, and do that for basically a risk reversal, and basically protect yourself up to something like 5% out of the money and put that on for free. And that's kind of an interesting thing because skew is so steep and rates are so low. The SPX doesn't have a lot of forward value, so the better trade may be an at-the-money call versus an out-of-the-money short put for even money.
There you go, listeners. A way to perhaps tweak the thorax of that trade to get it more.
Well, the thorax. I mean, a butterfly's got wings, right? A butterfly's got wings. It's got a thorax, right? What do you think the middle of the trade is?
That's good. In my fevered induced state, that's very humorous to me, sir. I like that.
All right. Well, it's the thorax. Am I wrong?
Maybe we have the title for the show. No, it applies. It works. It's just
it does.
It's certainly the first usage I've heard of that with an options
if it was called if the butterfly was a condor, I would call it the body instead of or whatever. But it's wings and it's a butterfly. So what's the middle of the butterfly? A thorax.
There you go. I may have to appropriate that for all of my future discussions on flocked spreads with wings. As we move on, all right, we got one more. Again, we'll end with a comment because that's pretty easy. I got a comment here from Mark. He writes, "Hey, great option block episode. I got even smarter about options again. The gift that keeps on giving. Options Insider Radio." Thanks. Well, you're welcome. Hopefully we didn't deluge you with too many repeat questions today. Again, my fever-induced brain is just about can make it to the end of the episode today before I collapse. So I think without further ado, before I do indeed collapse, let's move on into our final segment. A bit of a shorter show for you today, listeners, as we move on into the Around the Block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, we have seen a lot of earnings come out already. There are a few on the old radar. We got Chevron tomorrow. All of you paying attention to the oil sector, maybe want to pay attention to that one as well. And of course, you still have the fallout from all of the things going on in Apple and Tesla land. The Fed seemed to kind of punt a little bit again this week, so we're not going to see perhaps much certainty coming out of them anytime in the near future. For those of you looking for some Fed premium perhaps creeping in to the market. Aside from that, Mr. Sebastian, what else are you watching for the rest of this week into the weekend?
I'm really just watching, whether we get a one-off bounce today or tomorrow, or tomorrow or Monday. That's really kind of what I'm looking for, and and then we still have, like you said, you got Chevron, still a few earnings. Really, we may see, see things a little choppy, maybe even through non-farm payrolls next week, which are, but that's about it.
I'm kind of waiting to see if this non-farms becomes an event, because the last one was kind of a surprise event. People had kind of been writing off non-farms for the better part of the last year, essentially, as kind of not an event. They weren't really buying any premium going into it. They weren't hedging going into it. And then, of course, non-farms came out of nowhere and surprised a lot of people and actually moved the markets again. So I'd be curious if, with that now in our immediate rearview mirror, if people will start perhaps buying some premium and actually hedging and keeping their powder dry like they used to back going into non-farms. We haven't seen that in a while. Maybe we'll see that pattern start to reemerge next week.
Yeah, I would not be surprised. I think with the Fed saying that they're data driven, then data like that's really going to matter. So it's really where's employment, where is really, I think it's less about the employment and more about the wage growth. So that's going to be the key stat. If the wage growth keeps coming in soft, that's going to be bullish for the markets. If wage growth starts getting hot, if Jared is somehow right and wage growth starts to inflate, then that's going to be problematic. But I just don't see that happening.
If Jared is somehow right, then you'll be buying the steaks, sir.
Yeah, exactly. But I highly doubt it.
I think you're safe on that stake wager. We shall see, listeners. Stay tuned to Volatility Views to learn more on that front. But unfortunately, that's all the time we have for the Around the Block segments, also all the time we have for this truncated episode of the Option Block. I apologize for the brevity, but I think that's really about all I can handle here on the program today. I'll be back, hopefully, in fighting form next week, listeners. But before we go, as always, let me check in with my cohort here, Mr. Greasy Meatball, to see what's cooking in the land of the pit that may interest you.
Well, let me first lead off, Mark, by saying, you know what? Once a burrito crosses 9 days, don't eat it, and then maybe you'll avoid getting sick.
Either that or never have children because they are the petri dishes of life.
There's that, too. We just read our blog. We've been posting some really interesting stuff. www.optionpit.com/blog, and follow me on Twitter @OptionPit so that you can get all sorts of awesome information, like what would win, a honey badger versus the Komodo dragon.
And I gotta go with the Komodo dragon in that one.
It was the honey badger. According to boys,
toxic saliva.
I know, but honey badgers are impervious to poison. They can get bit by a snake and not die. So you've got
well, there you go. Now you've taken away their one weapon. Oh, well.
Boys Life magazine chose the honey badger.
Well.
So there you have it.
If they're going to have cutting-edge content like that, I may need to renew my subscription to Boys Life. It's only been about 30 years since I let it lapse.
Mark, I think there's a rule about 36-year-old men having subscriptions to Boys Life.
If they got that kind of quality content, I may have to usurp that rule.
That's true.
That's good stuff.
Yes, indeed.
All right, as we will leave you with that pearl of wisdom, listeners. And on behalf of the Greasy Meatball and indeed myself, and sure, even for Uncle Mike, who's out there on assignment somewhere, we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.